Daily Brief, August 14. It's about 8:20. We'll be doing the radio spot here in about 20 minutes for those of you that like to listen to the live radio spots. But just looking at the markets, down about 92 points. Not a whole lot of news. We had the Macy's number, again in the retail sector, which has been mixed. Macy's disappointing on the earnings and revenue, both top and bottom. Also, outlook reduced, so not looking positive for Macy's or the retail sector for a lot of these companies going forward. Although Deere had good numbers and that stock's up, but the overall market down about 90 points on the Dow right now. I wouldn't say an acceleration to the downside, but we're definitely fading throughout the trading session so far. But it's still very lackluster, low volume, summertime. I would say what we really need to see is at least one day where we have a big shunt. We need a 500 point plus drop in a day, whether it's based on actual data or just a news item or no news at all, and we just trade down with accelerated selling and momentum building on the downside. If we're going to have a correction, that's what we need to see. We haven't seen that yet. It may not come until we get more direct information out of the Fed as far as tapering goes, but that's what we need to see. Also, we had the PPI, Producer Price Index number, basically flat top line versus up 0.8 last month. And then we had the core number up 0.1 versus up 0.2, I believe, last month. So pretty much flat, which gives the Fed an excuse to keep going with QE indefinitely, as long as they can make the claim at least that they don't have inflation fears. But at some point, when you pump that much liquidity into the economy, you're going to have inflation, and they know it. So I don't think that's going to be a strong enough argument to justify continuing to do quantitative easing forever. Of course, Bernanke's out of office in January. Maybe he just wants to push it through to try to keep the markets and everything going along as they've been without too many negative impacts between now and January when he's out of office. So he may lean towards not tapering until late this year, December maybe, or possibly even pushing it past that so he's not there when it starts to happen. He's not an idiot, so he knows what the impact and ramifications are going to be once they start to cut back. Lots more talk about 87 style crashes and big corrections, big negative dips in the market. Lots of both fundamental and technical indicators that you could point to that say that can happen. So far, we haven't seen anything to indicate it's going that direction. But if we have a big down day, 500 point plus down day, a lot more people are going to be making that argument.